The dojis that formed in the Dow on Thursday and Friday was an indication, not necessarily that there was going to be a reversal, but it allows the candlestick investor to know what to do based upon how the markets open after those dojis. A lower open today would have indicated they were going to trade it down. A higher open would have told us, because of the doji rule, it was going to move in the direction how they opened, that the uptrend was still going to continue, trying to break out through all-time highs. So it's not necessarily telling you what the market's going to do. It tells an investor what to do based upon these signals, based upon what the next piece of information was. So we saw a doji gap down in the Dow, again, because of the Saudi Arabian situation. Does that mean there's a full-scale market reversal from that sell signal? That's where applying the analysis of the other indexes, which can be done very quickly because of the visual aspects of candlesticks, allows you to make a much more accurate assessment of what's happening in the overall market trend. The NASDAQ was lower, down 23 points. Most people think, well, the market was trading lower. However, with the candlestick chart, we can see that the market, or the NASDAQ, actually opened right on the T-line and then traded positive from there. So most people think, oh, the market was down. We can see there was actual buying going on right at a major support level, the T-line. So you add that factor to the Dow trading lower. Does that tell you everybody's bailing out of the market? Definitely not. Just tells you things opened lower and there was still some buying going on, especially in the NASDAQ. And the S&P 500 traded lower, but it traded lower indecisively. So it wasn't like there was a powerful selling force coming into the markets. So bullish signals or bullish chart analysis allows investors to be in the right positions at the right time, no matter what the overall market trend is doing. For example, our recommendation on NVAX was based upon the indecisive trading right here at the 50, followed by a bullish engulfing or a left-right combo, one of your strongest reversal signals, and the fact that it closed above the T-line and had bounced off the 50 with stochastics coming up, it's now putting the prospects that the bulls have taken over control, and there's a possibility of another price move of this same magnitude. As we saw today, our position was up 18% on a market that was very sloppy. What this basically illustrates is that we're buying bullish signals and patterns based upon what's happening as far as the information built into those signals or that individual stock chart versus what's happening in the overall market trend. And the weekend news of the attack on the Saudi Arabian oil fields showed us immediately that crude oil prices were gapping way up. That gave us a good, clear indication that we should be looking at oil stocks, but which one? Our recent recommendation on VAL was already in place because we saw the fry pan bottom, and now we'd broken out and using the 50 as support. And so we were in the right position at the right time, not because we knew there was going to be a big move in oil prices today, but the chart was already indicating they were buying this stock based upon the fry pan bottom pattern. On the other hand, positions that didn't have anything going for them, such as Whiting Petroleum, today we've got a best friend signal, a doji followed by a gap up. Now you can start seeing the fry pan bottom, so we can now make a very logical assessment of what to do with this position. If it opens positive, confirming our best friend signal and telling us the 50-day moving average was not acting as a resistance anymore, now we can calculate where's our next target, filling this gap, and then possibly up to the next moving average. Essentially what this does is we might not have known to be buying because there was nothing to instigate buying, but today's results told you exactly what they were doing with this stock and what we should be doing with it from this point. The same scenario can be applied to stocks that are selling off or going short. GM, as we can see, gapped down today because of the strike news. However, look what was setting up. There's what we call two dark crows. The previous Thursday had opened here, closed here. The next day on Friday, they gapped it up and sold it off again, creating a two dark crows sell signal with stochastics rolling over. So which are the best stocks to go short? The ones that have the most powerful sell signals. This one can still be shorted on weakness, which is, again, it's probably going to be the influence of what investor sentiment is telling us based upon the strike. And where's the next logical target? Well, if we can see if there's a support level right here, that becomes the target we want to watch for. The graphics of candlestick analysis make it very simple to see exactly what signals have occurred, which implies that there's a change of investor sentiment, putting your investment funds in the right place at the right time. That'll be it. We'll see you in the chat rooms.